Hey everyone, welcome to the very first episode of Blueberry Funded Monthly Updates podcast. I'm your host, Chelsea Guerrero, and I am joined by our special guest, the CEO of Blueberry Funded, Marcus Fetherston. Hi, Marcus. I'm so glad to have you on this podcast. I was actually looking forward to this for a while now.
Yeah, thanks, Chelsea. It's good to be on, and yeah, I'm super excited. I feel like as a firm, we've been around for 9, 10 months now, and this is the first kind of update, broadcast, podcast, whatever you want to call it. So it's definitely long overdue, but yeah, excited to sort of share what we've been up to and what we're working on with the community, and yeah, give everyone some updates.
Yeah, absolutely. So, before we get into the latest updates and some questions from our traders, this is our first official firm update. It might be a good start to start with some background for those who aren't aware of the history of Blueberry and the journey that we're currently on. So, if you could tell us a little bit about yourself and how did you get into the prop trading space?
Yeah, sure. So I've been in the CFD brokerage trading space for almost a decade now. My background is on the brokerage side, on really all things tech, liquidity, risk dealing, and that side of things. A few years ago, this space on the prop side was really was growing quite quickly. I had the opportunity to provide a lot of infrastructure, liquidity, and platform services for a lot of big name prop firms that are out there via the brokerage I was working with at the time. And yeah, it was really just a roller coaster from there. And I ended up sort of splitting off and working in the tech consulting white label side of the prop space, and working with 30 to 40 different firms in a very short amount of time. So yeah, got to see a lot of what prop firms are doing right, but most of the time what everyone was doing wrong, and really sort of learn from that and push the industry ahead, and it has been very pivotal in sort of helping build Blueberry Funded as well.
Yeah, awesome. That's really cool to hear. So let's also talk about Blueberry Funded. What's the story behind the firm and how did it actually start?
Yeah, great question. I mean, so coming from that period when I was doing consulting, white label tech and things like that, I sort of had a bit of an awakening or an epiphany, I guess, during that time. I mean, when you're in the consulting and the tech space, I mean, your real goal is to have, keep bringing on more clients, especially in such a fast growing space. So you have this real quantitative approach to bringing in business. But I think, just looking out there in the industry, everything that was happening, firms going under, things blowing up, it was a very wild west. I guess I sort of changed tact, and in my head, I was like, it should be a focus on quality, because, over quantity of firms. And that's because, whether, we as a business liked it or not at the time, that's where the industry was heading. So that was something I believed in quite a lot. The company I was at the time sort of had a different opinion on that. And, coincidentally around that time, I started talking to the team over at Blueberry Markets. I'd known them for a long time. They're based in Australia, so am I. And they've always had a really switched on management team, when it comes to trading and brokerage. And they'd done similar, infrastructure platform services in the prop space before. So they'd seen what the space is about, but they wanted to get a lot more involved with it and do something a lot more directly. So I think, they're looking to do something a lot more directly. I'm coming in with this. There needs to be a much more qualitative, long-term approach to this industry. And that's when the idea of doing a proper broker-backed prop firm, came to be. And that's exactly, what ended up being Blueberry Funded. So obviously we're backed and operated by, in the same corporate group as Blueberry, which is really great. They're a broker that's been around for nearly 10 years now, service over 50,000 active traders globally. And regulated in some top tier jurisdictions. So they know how to build things slowly over time that last, and that's really our approach with Blueberry Funded. I think I've seen and from afar and very closely a lot of the horror stories that have happened in the prop space in the last 3 years. So it was really our mission to build this thing sustainably, and not just sustainable for the firm's sake, but also for the trader's sake, to promote risk managed, risk adjusted trading, that can allow traders to be sustainable and profitable in the long term as well. And we've been at it for 9 months now. And most of our time has just been spent playing catch up with the demand. I think we knew this would be popular, but really underestimated how many traders really wanted a secure broker-backed environment for their prop trading. So we've been playing a lot of catch up, but now, we're excited to have a bit more breathing room and work on some new projects and launch some new things that can give even more value to traders than what we've delivered thus far.
Yeah, I love that. I mean, like you said, Blueberry has been around for quite some time now. I mean, I've heard of it, and I was actually really excited to hear when you guys launched the platform, and just being broker backed in itself. After hearing about, Blueberry Markets for so long, right? It's a trusted broker. So I myself was also excited when I heard that you guys came out with a platform. So I really love that. One thing traders have been really curious about is what made you personally decide to lead Blueberry Funded?
Well, a few things. As I was saying before, I think they have a really good management team and have a really great brand.
Mm-hmm.
And that's the thing I always say about, look, I think we were one of sort of the first firms to really tag that slogan or, our terminology broker-backed firm, when we went live. But now, really, there's any offshore broker or any firm, broker you've never heard of can add a prop business to their operations, and they are a broker-backed prop firm. But that's not the same thing. And I think that was where the space was at the time. I think to build a very good broker-backed, long-term, sustainable prop firm, the broker that was being worked with would need to be, a very large broker, lots of infrastructure, good regulation, but also be willing to try new things and be flexible as well. Because that's the thing, we see a lot of even very great brokers, very big ones, with a lot of resources, at their disposal. They start a prop firm, but don't really give it the attention or flexibility it needs. Because even though they're all trading businesses, the difference between a broker and a prop firm is quite nuanced. And if you don't respect that nuance and you're not flexible around it as a broker, the prop firm you operate is not going to be very successful. So I think Blueberry, as a brokerage, ticked a lot of those boxes. But the main thing is I think the management team shared that vision as well of doing this properly, sustainably, understanding that good things, take time, and really, whilst the prop space might still be in its infancy to some degree, I think it reminds a lot of people in the broker space of 10 to 15 years ago, what happened with a lot of, off-the-shelf white label brokers, and that a lot of them started, a lot of, young and hungry people, dived into the space, but, and a lot of brokers went down. There's so many brokers people wouldn't even remember now, just blew up, took on too much risk, didn't get regulated, didn't know how to operate. And we've seen the same thing now happen in the prop space. And looking back, we know the people that made the long-term decisions, sacrificed some, quick short-term money to build something sustainable long-term, reap the benefits over the long term. So I think, they understood that as a brokerage, and that level of flexibility needed. And that's why I think it's, was sort of the reason that I came on board, is sort of that shared vision and, a really good team that was over there.
Yeah, that's amazing. Like you said, I mean, I think a few years ago in the prop firm space when, everything kind of popped off, I do remember seeing so many different, prop firms at the time kind of popping up, but just as fast as they popped up, they were falling off really fast as well. A lot of them couldn't really be sustainable over time. So like I said, it sounds like there's a lot that goes into it, but I think Blueberry has done a great job so far with, it sounds like the way that you've kind of structured everything. It sounds like it's in for the long run, and I think something being sustainable over long term is the best decision that you can do, right? Especially in this prop firm space with so many prop firms in the past just falling off.
And it's tough because a lot of firms are still, even after all the difficulties, and it might not be as easy to start a prop firm as it was maybe 1 or 2 years ago, but it's still a very relatively easy business to start whilst it's an unregulated space. And so we are still seeing a lot of prop firms begin, but what's interesting is we see the same pitfalls and mistakes being made because the narrative, as much as, people have improved things a bit, the narrative has still remained the same. And that's what we're trying to spread as a message here. And, it's not always easy, having more conservative challenges, being more focused on sustainability, when, really the main narrative out there is a race to the bottom. It's running very much a fantasy sports casino style of trading, prop firm model, which, isn't good for the firm because, they take on a lot of risk, and it's not good for the trader too, because really the rules that the firm has don't promote actual prop trading or any sustainable prop trading. It's just, letting things loose, making it easy to pass, and, not having that long-term outlook. So we're going to see more of those horror stories unfold, unfortunately, in a lot of consolidation in the space. I still think we're just getting started with that. But I think, as much as we look to our competitors, we do sort of stay in our lane, and we're, focused on that core mission of sustainability. And look, it's hard sometimes. We get a lot of feedback in Discord. We get a lot of traders come back saying, please change this, please change that. And the temptation's there because, it's a real tough sort of sell in this space because, what is considered, as a trader, I can understand why those other prop firms and very easy to pass products are more appealing, because you're actually getting, your ultimate goal as a trader is to reach your payout and earn money. That's why, that's what trading's about. It's about earning money at the end of the day. So it's very easy to look at the firm that's going to allow me to get to that payout the fastest and most easily, has the best product. It's easy to look at it from that side, but if you look at the full equation, and it's a hard thing for us to ask of traders, but ultimately it's, don't just look for who's going to make it the easiest, look for who's going to make it the most sustainable and long term, because you don't want to just get one payout and then it's gone. You want to be able to earn sustainably 1-2 years in the future and know that your simulated capital and your payouts are safe, for that period of time as well. So it's not been an easy thing to do, but it's been good. We're seeing other prop firms really stick to a core mission of sustainability now and have, lower risk or more conservative challenges for traders to use. So I think that message is spreading more, and I think traders are waking up, which is really good because they know that it's tempting to trade with 1 to 100 leverage. It's tempting to, be able to trade news. All those things might seem great on paper, but, the firm is kidding itself and the traders are kidding themselves. They think that model is going to work for both sides, in perpetuity. So it's been a hard mission to sort of change the narrative, but we are seeing the results now. And I think the fact that we've scaled to where we are in such a short amount of time is also testament to that as well. So we're very proud of that, and we're very much sticking to that mission. Not to say we're not going to maybe make changes to our challenges in the future. I think once we have the data and know that we can handle more risk or different risk, we definitely want to be able to do that and offer even more types of challenges to traders. But for the time being, it's all about sticking to the sustainability and scaling from there.
I really love that. You can tell that, Blueberry really cares about their traders because of that. Like you said, the temptation's there, but choosing to kind of stand on your core values as a company, I think is so important, and more traders should look at characteristics like that when they're doing research on firms that they want to trade with, not necessarily the easiest ones. And also, I do want to piggyback on what you were saying earlier, where, we have prop firms out here with very easy rules, and it's very tempting to obviously take those challenges, right? But at the same time, I feel like because it's so easy to pass these challenges, it's not sustainable in the long run. So then what ends up happening is, I've seen a lot of firms as well start to change their rules, later on, when they start realizing, people are buying these challenges because they're easy to pass, and then that leads to a lot of gambling from the trader side. So then they have to tighten up a little bit later on the line with switching their rules, and ultimately the traders don't really like that, right? So I think it's a better approach with having such strict rules now, and then, like you were saying, assess it a little bit later on down the line if you can change or handle more risk or approach it in a different way. So I think that's amazing, in all honesty.
Yeah, it's a good point because, it's my ethos, not just in trading or prop firms or brokers, but in any business. You can always give things to clients, but it's very hard to take it away. So it's like, once you've crossed that line, and prop firms have the opposite approach, because a lot of people in it come from e-commerce, that they're like, well, I'll start really lenient, I'll make things very easy, I'll capture market share, and then I'll change it later. Or even worse, they don't plan that, but inadvertently realize that they have to. And one, that's not good for the client experience, but two, it makes the firm look really bad. And that's when people start questioning, do they have liquidity issues? Is this going to be a rug pull? And then less people buy, and it's a bit of a self-fulfilling prophecy, because less people are purchasing the challenges, the firm becomes more illiquid, or can't manage its books or anything like that, and essentially causes that very issue that the firm is trying to avoid. So with us, it's we prefer to start strict and know we can handle the risk and change things as we go, than the other way around, which history has shown us isn't a smart way to run a prop firm.
And I think that's the way it should be. So now let's dive into some updates. March, I hear, has been a really big month. Can you share a little bit about what's been happening?
Yeah, definitely. Look, it's been it's been a very full-on few months for us in terms of growth, and I think it's great to sort of see the stats also reflect not just our growth, but the growth of our traders as well. I mean, it was a record month for funded traders. We had about 370 traders, reach the funded stage, which we were really, really excited to see. To see those people get through, which is really good. I think when it comes to how people got funded, and it's a question we always get is, what sort of trading is best suited to your rules? Because we understand that we have very conservative rules, and we also understand there is no, one size fits all prop firm, and we always understand that with traders, and we always implore people to look at our rules, read the documents, read the FAQs to make sure that if you have a very specific style of trading that our rules are going to suit you. But looking at the numbers, on past accounts, the average winning trade was, really earning about 1.1% of the account balance, per trade to get people from the evaluation to the funded stage. And in that sense, it does really appear that swing trading is more popular among our traders, based on the back of that to get funded. And we also see that in the payouts as well. We see sort of the majority of trends are really sort of going towards swing traders. And, in the last month or two, I think there's a lot of reason for that, given sort of some of the volatility we've seen, in the markets, especially serving gold. So it's been really interesting to see that. Again, we can only ever answer those questions with the data that we have. I mean, I've always thought, and it's always been very known in the prop space, that swing traders generally on average can be more successful given the rules that prop firms promote. But, kind of like, trading strategies, our parameters might work really well for swing traders because of how the market is working right now, but that could change at any month. And we sort of see that these stats swinging very much like like you're looking at a chart, month on month in different directions, it's good to see that, there is like a volatility of sorts in strategies that can work, or preferred strategies among our traders. But yeah, for the last few months, it's definitely been geared more towards the swing traders.
Wow. Yeah, I can imagine too, just because of the current market conditions, it may be easier to swing trades right now. Personally, I'm a scalper, so I'm actually curious to know. I know majority of the traders and the stats that we have are swing traders. However, I don't know if you have any stats for scalpers or those that hold their positions shorter, but is there anything that you do notice about traders that do hold their positions a lot shorter than those that swing? Is there anything that you can kind of pull out that may be interesting about that, or you would say that the number compared to swing traders is just not even relevant?
No, I think it's definitely relevant. I think as much as our conditions, again, you never know if it's like a correlation, causation kind of type thing. We might just happen to be more popular with swing traders. The market conditions in March might, and I think based on sort of the movements we've seen over the last 6 weeks, could have been a lot more favorable to people holding longer swing positions. So it's hard to know really exactly where where the cause is really from. But when it comes to scalpers, we have seen a lot of success, among traders as well. And I think the key difference that we generally see between the swing and the scalpers is sort of that we see a much more, and again, this is just the data. We don't know if this necessarily is the cause of success or not, but we definitely see people scalping, like holding trades, for much shorter time periods, having a much more conservative risk-reward ratio being used, which I found that kind of interesting, because obviously I think if you're holding a swing trade a lot longer, it's going to impact you a lot more negatively if you're willing to take on more risk. But that being said, I think that is something we did see among scalpers who did pass and did get payouts. I mean, a vast majority of past accounts and payout accounts were more of the swing. And again, even within scalper and swing, there's a lot of different subsets that we bucket and categorize traders into. So I'm speaking quite generally right now. There's a lot of different ways you can be a swing trader, a lot of different ways you can be a scalper. But I think the one thing we saw is when people were more successful as scalpers and swing traders was having a much more conservative risk-reward ratio in how they were trading, which again is also reflected, again, anecdotal. The numbers in this space are very hard to sort of see what's out there all the time, but that's sort of reflected in a lot of other firms' data as well, in terms of passing and where people see success is sort of swing trading, conservative risk reward ratio, things that sometimes seem a bit more common sense, but sometimes it's good to see that reflected in the data as well.
Yeah, and I can imagine on a month by month basis, obviously, like we were talking about, market conditions can change. So obviously the data, will be changing every month. But I also think, like with what you just said earlier, the stats on the swing trading, I feel like, with the average winning trade on past accounts being around, you said 1.1%.
Yeah.
Yeah, so I think with that, it's clear, like, swing trading really did work, especially in March, right? This past month. And that's exactly why I feel like a lot of people should, lean into CFDs. With CFDs, I feel you get more of the flexibility to hold longer trades without really the stress of, like, any crazy fees as well, right? Especially when you're trading assets like gold, and you can kind of size in properly, let the trade play out, and not feel rushed because of high costs or limited tools. And you're not trying to force like a scalp every time. Sometimes I feel like the cleanest setups just need time, and CFDs really give you that breathing room to catch those high quality moves while still managing the risk that you want to. So I'm very surprised that we have more swing traders, and those that are passing with more swing. But again, it's given that flexibility, which I think is super important.
Yeah, exactly. And I mean, it's a good point because I guess really, as opposed to, you know, futures trading as an example, like I think really that
Yes.
swing in things like gold or even in index markets, because we've seen
Yeah.
what's really interesting, and I guess we're moving ahead to April here, but we have seen, a big shift over to indices in the last few weeks. Obviously, we're seeing the swings in the
Mm.
US market and that, being able to hold, over rollover or over the weekend, no auto closer positions allows people to really sort of lean into those positions a lot more when the opportunity is presented, which is really interesting. But I think the other thing I found really interesting in the stats for the last month is the pass rate. Talking about past accounts, that our one-step program has an overwhelmingly higher pass rate than the two-step account.
Wow,
Again,
that's
still
so
with swing trading.
interesting.
Well, it's one of those ones. Look, I mean, it's one where I'm committed to our core ethos of sustainability, and that. But sometimes even I'm surprised when the data continues to
Yeah.
confirm that more, because I'm here thinking like, and I'll always say this to people: look, we have a lower than average industry pass rate, but once people
Mhm.
pass, and again, this is based on very broad statistics, as there's only very relatively little like industry surveys or studies that have been published or put out in news pieces, but we have a much lower pass rate than a lot of firms. We do make it conservative for people, but once people do pass, the payout amount, or what we call the average funded trader profitability, can sometimes go as high as doubling the industry average. So it's one
Wow.
where, like, we launched this with an ethos and a vision in mind about sustainability, but then, over time, which is exactly what we forecast and we're hoping for, the data actually sort of rang true, because people always say, oh, your challenges would be so much more popular, or they'd be so much more easier if you changed this or changed that. And I said, but based on the data, like, we don't really want to change anything right now, because
Yeah.
look, we're not admitting, we're not trying to sugarcoat it or say that we have easy to pass challenges, or you're going to find it easy to get a payout with us. But the main point is, once you get funded, you will stay funded for longer on average, and will be more profitable than with other firms based on our data, and that's reflected because of the challenges. So that's something we see it, month in, month out. We see that continued trend, which is great in the data. But then to see this in March, where it's like, well, we already have conservative rules, but the more conservative challenge that has tighter drawdowns and lower leverage had a higher pass rate than the other one. And it comes kind of back to, and this is even just our way of doing things or our vision, but it comes down to what you'll see the best traders talk about, which, and like you were sort of saying before, it all comes down to patience and letting things play out over the long term and not rushing it.
Yeah.
We sort of have our first few trader interviews that are being released on YouTube soon, and it's funny just talking to everyone who's gotten payouts in our firm. They all, without us talking about our sustainability, our challenges and stuff, always bring up, it's just about patience, and it's about not rushing things, even more so than patience. And I don't know, it's kind of maybe coming back to that, but it's an interesting one, that even in a firm that already has very conservative challenges, the more conservative option ends up sort of outperforming in terms of past clients as well. So I think it's one where, and I always joke as traders, like, we really, or in life in general, like, we're at the worst judge of ourselves. And so it comes back to like what we were talking about earlier, like, you might look at a challenge and be like, yeah, more leverage, easy to pass, easy payout, I'm going to pick that one. But sometimes, deep down, you should be saying to yourself, even if you do have more freedom in a challenge with us or any other firm, you should still treat it very conservatively from a risk perspective,
Yes.
because the data very much proves that, yeah, taking it slower, being more conservative, not going into as much drawdown or exercising as much leverage, is going to lead to longer term success.
Yeah, I agree. I think when you have those easy rules, it's very attractive. But then at the same time, it's like your discipline as a trader just goes out the window, because you have this much leverage, you have this much drawdown, the rules are easy. So the temptation kind of creeps in there to break your rules and not being as patient. So I think it's great that, we have this in place. And I think it's so shocking. I'm actually shocked that we have, those that are passing the one-step challenges over the two-step, right? And there are stricter rules that you would think that wouldn't make any sense, but based on the data, that's so interesting.
Yeah, and I mean, the obvious thing you might bring up is that, the two-step is two steps. It's naturally going to take longer, but really just for the extra 5% in profit, but with, the higher leverage and much larger drawdown, you'd think it would still give people the ability to pass. I mean, not necessarily more than a one step, but to an equal degree to an extent. But sort of overwhelmingly, the pass rate on the one step was, very much outpacing the two-step challenge that we have, which I thought was, again, kind of, even after all the data we have on sustainability and conservative trading giving more payouts, to see that sort of happen over the last 2 months was sort of, even I was like, well, geez, keeps proving the point even more. Even I'm surprised by that, but it's great to see.
It's great, right? Because the overall goal here is to change the narrative, like we were talking about earlier. So I think because that if we see more stats like that, I feel like that is slowly changing the narrative right there, that it is possible, and to be able to, promote these better habits for traders, right?
And I will say, that's why we're doing this.
Yes.
I mean, I think it's why we want to do more of these updates and be more out there with our stats. Because again, like I said, we've been playing catch up for the last 6 months, and I think there's so many good news stories from the trading we've offered traders and things we've been working on we want to get out there. Because like I said, I don't blame traders for always asking us, make this easier, give us more leverage, get rid of this rule, change that. I completely get it. They want to have the best product for them to get to a payout and to earn money, which, as I said, is what we're all here to do. But the reason we're doing things like this is to show people, well, actually, and it might seem counterintuitive because we have harder rules that on the face of it would make it harder to pass and make money, but we're showing that when people can pass or do pass those rules, they do make more money and, much longer as well than the industry average. So like I said, we've been fighting an uphill battle to change the narrative, because a lot of the, casino prop firms, race to the bottom people have sort of what they have crafted into what traders perceive as the average or vanilla product in this space, I do not believe to be sustainable for the long term. And where it is sustainable, where we do see, because people will always say, and this goes back to my consulting days. I remember I would be consulting people, I'd do all the risk models and be like, you should do challenges like this. And they'd say, no, we're going to do it like this firm does. And I'd be like, you probably shouldn't do that. It's a lot of risk. And they'd say like, oh, well, they're the top, like the 5th biggest prop firm in the space. So they couldn't be doing this if they were, they must be making all the right moves if they're that big. But the thing about this space is it's fast growing and we don't really know what's going on under the hood with a lot of these prop firms. And that is still even happening today because, and also a lot of those firms that were the inspiration for a lot of smaller firms did blow up themselves, which kind of, I hated to be in that position of, I hate to say I told you so when, the space was really not benefiting from it whatsoever, quite the opposite. But it's an unfortunate truth, and I still say that to traders now because, look, there are a lot of large prop firms that have loose rules. I'm not even just referring to the bucket shop or the small time operations. There are very large prop firms that have loose rules. But again, just because they're big doesn't necessarily mean that they're sustainable. In fact, I was talking to someone about this yesterday. It's like, even after everything that the space has been doing the last year or two, like I still don't think we're ready as an industry to encounter any massive system-wide shock in the same way the broker space did with the Swiss National Bank decision back in 2015, which overnight wiped out, sent very large brokers bankrupt, or into, very bad financial positions and that. And I think the worst we've seen in the last year is people just not knowing how to manage risk, even in the best of times, or a platform going down or losing access to a vital platform, and that's disrupted the space. So I think even with how a lot of large prop firms are operating now, if there was a black swan event or something, a very large market shock, I'd be very interested to see how they'd handle it.
Yeah, same here. But like, I think you as a CEO, it's great that you're an advocate for traders like this, right? Like just promoting that, because I don't see a lot of other, CEOs because like as you said, you could have done all of that, right? But I don't see a lot of CEOs out there being true advocates to wanting to make traders better in terms of at the risk of being different in terms of having stricter rules for their traders. So I think again your message is amazing, and I think that's great what we're doing here at Blueberry. Another thing I did
No,
want
I
to ask,
appreciate it.
yeah, of course. And another thing I did want to ask was, what is the most popular traded asset within Blueberry or our challenges?
Well, the answer I give, which I think every prop firm and most brokers in the world will give, is going to be gold.
Mhm.
It's always gold. And I feel like every year the percentage of gold trading just increases. Like when I started in this industry like a
Yeah.
decade ago, it was like gold might have been the third or fourth highest traded instrument behind like euro dollar, cable, like pound dollar and things like that. But now, gold's been number one for a few years now, and it just keeps growing because really, I think with volatility, it's like the ultimate volatility asset a lot of the time, and
Hmm.
we've seen a lot less action in FX, I think, than we have in gold. So it still sort of is the way, but what's interesting about it, it's the most commonly traded instrument, and also it's the most commonly traded asset people pass the challenge on and get a payout, which is really interesting. But the funny thing is, you've got to look at it from a net position, because really, once we take into account the failure rate of people or sort of blown up funded accounts, gold is still the main cause of that too. So it's a double-edged sword, which makes sense because it is like a
Oh,
pure
yeah.
proxied instrument for volatility. So it's the one people make the most money trading on with this and passing on, but also the main reason people also fail as well. So if we actually take the fail rate out of trading, or we look at the net position, we actually see like NASDAQ and Dow as sort of the main drivers in a net position of passing and payouts as well, which I think is really interesting because I think, look, gold, like I said, the thing that makes it, like all trading, the thing that makes trading great is also the thing that's going to make it bad, being that, the thing that's going to give you the most reward is always going to have more risk attached to it too. That's how markets work. Market's not handing anything out for free at the end of the day. So
Mhm.
it's a very valuable lesson to be aware of there. But yeah, I think we found that very interesting to see that on that side in terms of taking into account the fail rate, that NASDAQ and the indices are actually better performing from a net position than gold has been over the last month or two. Again, could be biased data because we don't actually know, how people are trading or with what strategies, but I think it's always a good indication as well for traders to be aware of.
Yeah, I think so too. That is really interesting, a double-edged sword. But I could definitely see why though, because yeah, gold is pretty crazy. But
Well, it's that volatility that also attracts
yeah,
very poor trading as well, because obviously people that have a gambling mindset are going to go to the most purest form of
yeah.
volatility to try and get through quickly, and that's the thing as well. I think because gold is so much more traded, when we really look at it, whilst we see the average time to pass an account on gold is 8 days or 8 trading days. If you do pass, the average time to fail on it is much shorter. And in fact, the average failure time on gold is much shorter than a lot of other instruments. In that, how many trading days does it take to fail a challenge is much shorter than people who their most average trade asset is a different asset to gold. So that's an
Mhm.
interesting point too. Is it attracts the winning traders quite a lot too. On the flip side, I think it brings on a lot of shorter term mindset traders as well, which is purely because of the volatility. If that
Yeah.
changed, if gold wasn't like the leader in volatility tomorrow, that those stats I would bet a lot of money on would transfer
Yes.
to another instrument ultimately.
Yeah. That that that's crazy. But I will say that this is really nice growth, considering that Blueberry Funded has been operational just for what you said, 7 months?
9 months now, and I should
Nine.
I think it's even 10. I lose count. It's been
Okay.
a blur. Like ever since we've gone live,
Yeah.
it's just been a chaotic 9-10 months. But
Yeah. But
yeah, it's still in the scheme of business in the trading space, not a very long time.
yeah, I mean, but the growth within just even under a year is crazy, right? And April is definitely looking even more exciting from what I hear. So for April, we have some really exciting things coming up, right?
Yeah, definitely. So we have a lot of good things in the works. I mean, look, it's been a crazy 9 months in that I think a lot of our forecasted goals or places we wanted to be by one and a half years we've already reached. Hence when I said before, we've been playing a lot of catch up because we are way ahead of where we wanted to be in terms of, our Discord is over 25,000 members. We get over 1 million website hits a month now. I think we got into the top 10 prop firms listed on Prop Firm Match as voted by users. So it's sort of crazy to hit into that sort of, which is a metric or sort of something I've always looked at to sort of measure success in the space, is like how high up you're sort of ranking on Prop Firm Match and other review sites as well. So to be hitting that within less than a year, we're really proud of. But again, it's only the start of the story. Like I said, those are all very vanilla things at the end of the day, getting a lot of web hits, ranking well, they're normal indicators of success, and we're very grateful and thank the community a lot we've reached at this point. But in return, we're just getting started, at the end of the day, and want to be releasing a lot more things. I think in March, we launched Trade Locker as a new platform based on the demand of traders. We're moving into new asset classes as well. We've launched, stock challenges very recently, and that's a trend you're going to, without saying too much, you're going to see us continuing, is trying to bring prop trading into other asset classes where it's, we think there could be a lot more popularity. We've seen a lot of rise in sort of crypto prop firms as well very recently, and so we want to make a product that's a lot more friendlier to crypto traders, for example, because again, we have that brokerage infrastructure to lean on at the end of the day. We're focusing on CFD prop world here, but then we always forget, we have like over 100 crypto CFDs with like very top tier liquidity. It's not like an out of the box price feed like other prop firms, and so we have all of these good things by just virtue of being connected to a large broker that we haven't utilized as much as we can. So in terms of new platforms, new asset classes, and new challenges, that's really what we're focusing on over the next few months. So I always say to people, it's like, we spent 9 months playing catch up. Now we can actually breathe and say, what's the prop firm that we actually, want to be, at the end of the day? Because as much as we're backed by Blueberry, and that's a very large part of our brand identity, we don't want to be like a lot of other broker-backed prop firms where it's just a prop firm just attached to their broker and it's like, cool, there it is. We want to actually be at the forefront of this space and keep offering new things to traders or new ways to promote the prop firm and that. So we have some very big things coming up throughout the rest of April in terms of some new challenges, some new asset classes as well, which I think not really anyone else in the prop firm space has done as much. Some other things which I think are going to be very interesting in the Twitter X space, that is going to be very, very popular, I think, as a voice for traders. I think that's something in this space because there's no regulation right now. There's not really anywhere clients can go to voice concerns. We have all of these so-called community pages on Twitter, which I think are more in the business of spreading misinformation and blackmailing prop firms than actually listening to traders. So we have a very big announcement coming out on the 22nd. I'm hoping this video is posted before then, or else this timing is going to be completely off. But so we have that coming out as well to sort of announce sort of a new partnership with a third-party entity that I think is really going to be good for traders and other prop firms over the long term as well, because we're very big on collaboration within the space, which is really big. Some big updates coming. Been a lot of growth over the last 9 months and a lot of new things in the works as well. Yeah, it's a good question at the end of the day. And like I was saying earlier, there's no one-size-fits-all prop firm. We know that prop firms are going to have different rules and things that suit different traders. What we aim to be is the best all-round prop firm to the best of our ability, and that comes through, sustainability. Ultimately, as I've said before, look, we have some of the stricter challenges in the space, but we're not saying it's going to be easy to pass with this. We say that it's worth it with us because once you get used to these rules and you trade them continuously, it's going to educate you more, and you will see more long-term success based on the data that we found over the last 9 months of operation. You take that and the fact that we are backed by a very long-standing regulated global brokerage like Blueberry, that's going to give you a lot more sort of comfort in security of your simulated capital, to know that this isn't going to be a firm that's just going to blow up at the first sign of trouble. In fact, we've built the whole firm and the rules and everything to avoid trouble being one of the main things that how we want to operate ultimately. But that being said, like, we know that security isn't everything to people. It's also competitiveness, and the benefit of being broker backed. It's not just having a name on the page and having a bit more security. It's also giving benefit to traders, because what brokers, especially a regulated broker, has access to is a lot better infrastructure, a much larger, operations, risk dealing team with a lot more experience. And, through being regulated, they have access to tier 1 liquidity. A lot of prop firms, just to sort of explain it, just get an out of the box price feed. They don't actually understand what optimizes that feed. Because like I say to traders, any strategy you have is only as good as the liquidity that can support it. And that's the thing that, when it comes to, if you go to professional investment firms, hedge funds, trading floors, as much as the traders, the quant analysts, people like that do the trading or make the strategies are important, the people managing execution are their own role as well. And, being your own kind of fund or your own kind of trader or a career trader, you focus on the strategy and everything like that, but you never stop to think about the execution side of it as well. Because ultimately, some strategies, the difference between long-term profitability and not being profitable could be anywhere, it can be $50 per million, which is like, $10 per FX lot. Doesn't sound that much at the end of the day, but studies show that really sort of is, sometimes, on average, the difference between profitability and non-profitability. So, you're talking in terms of, points on average or commissions or things like that. But those things are, it's the cost of you doing business as a trader. And what's funny is in the prop industry, I think the thing that's blown up a lot of prop firms is they focus too much on the sales and not enough on the risk and the cost of doing business. And what's funny is I think a lot of traders invariably do the same thing. They focus on the strategy, they focus on capturing, the pips and things like that. And they even focus on risk, like, how to set risk on the trade, but they never think about the execution side of it. And that's why, another reason I believe for our trader success as well, in terms of earning profits, are the fills that they're getting. It's a deeper order book. The conditions that we give people on Blueberry funded, pretty essentially match or are the same as people are getting on Blueberry markets on a live retail brokerage, which we get through access to tier 1 liquidity providers. So again, it's not all about, slogans on a website or just security. It's actually giving you conditions that will help make you a better trader and get more value out of your trades and the strategies you want to work with on the prop firm. So those are things that I think are very beneficial for traders, and why I think we stand out from the competition a lot. Exactly, and look, I think I know where this question may be sort of coming from on this. So, it's no secret. The things I always say, the things about this industry are great, but also sometimes what make it really bad. I really love the X community in this industry. It kind of was such a breath of fresh air. Reminded me more of the crypto space than the brokerage space, and that's what always drew me to it. And I really love it. The downside of it though is that lies spread faster than truth, and things get out there, and people become conspiracy theorists and read into things. So I think a few weeks ago, a screenshot from Blueberry Markets customer support or something saying we're legally a different entity or something spread around, and the so-called community pages were saying this is evidence that we're not part of Blueberry or something like that. And it was funny at the time because I was in the Blueberry Markets office when in Sydney when someone brought this saying, yeah, people are thinking you're not part of Blueberry Markets, and I'm like, I'm just looking around. I'm like, I'm here with like 50, 60 people from Blueberry, working on this. But it's part of the fun in this industry, I think, too. People, love the industry and are quite passionate about it, which causes them to sort of spread these kind of things around. But I guess to sort of set the record straight. So Look, in terms of how our legal entity setup works, look, we are part of the same corporate group of brands as Blueberry Markets, same, ultimate beneficial owners and shareholders, upstream. At the end of the day, we do operate via, a separate legal entity. You can see that on both of our websites quite clearly. And obviously the reason to do that is that a brokerage business and a prop firm business are quite different. Unfortunately, there is no regulation in place for prop firms right now. So sort of crossing that into the same entity that's offering brokerage services doesn't really make a lot of sense from a legal standpoint, for the time being. But yeah, that's just good business at the end of the day. I think if traders look at any large brokerage brand globally, you will see that they separate everything and they do into tens, dozens, hundreds of companies sometimes, especially ones that have entities in different jurisdictions. They have different licenses. They might even have different corporate entities for different departments of their business for legal reasons or for various other reasons. So it's not an uncommon thing, but I understand why traders want to ask, because they want to have that certainty around, it being broker backed and being backed by, a broker that is as popular as Blueberry. So I'm actually really happy to sort of answer that one, very, very directly. But look, in terms of what makes us different to other broker-backed prop firms, and I think I touched on this earlier, is, being broker-backed, can mean a lot of different things. Someone can start up a broker in the middle of nowhere, no one's heard of, and attach a prop firm to it, and it's a broker-backed prop firm. Likewise, there are established brokers that start prop firms that have been in the industry for longer than Blueberry has. But likewise, they might not actually make a good prop product. I think what makes us, in my opinion, and I'd like to think the numbers online reflect this too, what makes us the best broker-backed prop firm option is we're the best of both worlds. Like I said, a lot of brokers might start a prop firm, but the nuanced differences between a broker and a prop firm, they may not understand. So they might be great at running a brokerage. They might even have a very large regulated brokerage, but the prop product they put out there doesn't really cater to the prop community that well. And look, vice versa, there are these existing influencer-led prop firms that have built these great trading communities, who they listen to, and they might understand the nuanced, risks that come with running a prop firm. However, those people lack upstream regulation, access to certain liquidity, access to certain trading platforms, or they lack an understanding of how compliance and legalities and things work. And look, that's sort of an issue in this space that's very overlooked. Is look, even though prop firms are unregulated, like no one is questioning that a lot of the time. Like I think you are still bound to a lot of legalities around KYC, AML law, and things like that. And look, it's something that, again, the race to the bottom has happened in that side as well. Like when we want to pay, an affiliate or someone or a vendor, and I use the term vendor very loosely in the prop space, pay them an invoice, they're like, cool, I'll pay an amount for something, like, here's my crypto wallet. I'm like, well, no, we're going to need a signed contract, we need your address, we need your name, we need to KYC you, you need to send an invoice to us with our address on it and everything, and they'll say, oh, well, X, Y, and Z prop firm just sends me the money. And I'm like, well, if they're not doing any sort of due diligence on your wallet even, or running it through like an AML screener or something, that sort of has a lot of legal issues attached to it. And that's the thing is, some of the prop firms doing that, again, they're not the basement prop firms or the bucket shops that are like, 300th in the world. Some very large prop firms that run great prop firm businesses. Again, they know how to run a prop firm very well. They're not actually, running the legalities of it very well. But to get back to the core of the question, I think what makes us the best broker-backed prop firm is we are the best of both worlds. A lot of our staff have over 3 years experience in the prop space, so do I. We can take the things that are best about a brokerage, like the infrastructure, pricing, and compliance, but we actually combine it with listening to traders, running a very large Discord community, and understanding what makes prop firms nuanced and different, and bringing all of that together. So I think that's sort of what we do differently to a lot of the other broker-backed prop firms out there who have a much more simpler take on how to run a prop. Okay, so a few questions to unpack in one, which is good. So it's a great question in terms of, so we are releasing brokerage payouts very soon, within the next few weeks, which is going to enable traders to do a payout from their Blueberry funded account to their Blueberry Markets account. As part of that, we've had those conversations of, well, how does KYC between the entities work? Can we, can we share that? How does that work? And look, we're having ongoing discussions about that. But for the time being, look, they are separate entities, and they also have separate KYC requirements as well. As much as we take KYC very seriously on the prop side, I'd say a lot more seriously than other prop firms, to be honest about it. We still KYC people to a very different standard. Again, being a brokerage, the way they KYC, the questions they ask are very different for legal and compliance reasons to the ones that we have to ask, or the standard that we'll KYC at. So they're not level playing fields and thinking just because I'm KYC'd at funded that I can go to markets, or vice versa. So there is, sometimes a shortfall or a gap in the amount of KYC you've done between both entities. So rather than overcomplicate the process and things like that, we've said, look, separate KYC for both entities. Again, look, our KYC, using Verif, using SumSub is very, very fast paced. So, we haven't had a lot of, reported issues with it. People get KYC'd and approved very quickly. So I don't think it's too much of a hindrance for traders. But yeah, essentially to answer the question, different levels of KYC between the entities, and being separate entities, data sharing and things like that, even in the same corporate group, we are still quite cautious about, which is very important for trader security and information security as well. So, I mean, it might sound like we're providing less in a way, but again, it's one of those things where when you work in the, a much more professional space, it's something that it might seem like, we're offering less, but we're actually offering more because we're doing it the proper way. But look, in terms of regarding 150% margin rule, do you intend to introduce seed traders? So I feel like there's two questions there. I don't know, maybe if there was a mix-up. So do you intend to introduce seed trader? Look, we're always looking into new platforms. I've worked at brokers that have offered seed trader in the past. I know it's a very popular platform out there. We currently offer MetaTrader, DX, recently launched TradeLocker, as that was, the higher requested platform that traders wanted based on what we were seeing online. But look, we don't have short-term plans to do seed trader, but again, like over time, we want to give as much value to traders as possible. So I think we will make moves on it at some point, just not in the short term. Now, the margin rule, because this is our most requested change on Discord. I'm not going to try and hide it. People always coming in and asking about the margin rule. And for those of you who aren't aware listening, on our challenges, we don't allow you to go under the 150% margin level in our trading platforms. Now, one, that's a very valuable risk management tool as well. Like, I think as a retail trader, you don't think anything of going from 150 down to 100% margin level in the platform. But 100% is the margin call level. So really, on most brokers, that is. So really what we're saying is we want a 50% differential between the margin call level, which again, to a retail trader seems like a lot, but if you were talking to a pro trader or someone on like a trading floor, they'd be like, going to 150%. Like, I think I was even talking to someone I do that works sort of in, much more institutional settings. He's like, now set it at 500%. Like, no, that would literally limit people massively. It's not how it works, because he's like 150% is like still very loose in that. But regardless, like, it's one where I always say when it comes to these kind of risk management tools, if we took that away, we'd have to replace it with something else. Now, that might be a max lot size rule, but the thing about max lot size rules is they're quite blanketed, or like one size fits all. So it's like 10 lots on FX or 10 lots on majors and minors. The thing about the margin rule is, look, it passively is a bit of a lot size rule, because you can only place trades of a certain size before exceeding that, but it is based on notional value. So, what is a certain lot size on Dow is different to what's on NASDAQ and things like that, because it's notional value. So again, it's one of those ones where we could do a fixed max lot size rule. It might be easier to understand, but it would actually give traders less value, which is something, I try to make people aware of. But if we did change that rule and replace it with something, it would be, again, maybe a consistency rule or something for traders. And again, I think as much as everyone asked us to change it and would want something else, I know based on surveys, consistency rules are less popular than a passive lot size, fixed lot size rule. So again, we're continuing with it for the time being. We might in the near future present other options traders can opt for in the checkout, because we know that the margin rule isn't as favorable to to scalpers, but consistency rules aren't as favorable to swing traders. So in the future, we might actually give people the option to choose one of the rules and actually make more flexible checkout. That's just an idea right now. We're still modeling the data. Like everything we do, we don't make the decisions lightly, because we have to sort of forecast for the next 6 to 12 months off the back of it, and certain ranges of market volatility that might happen, or implied volatility and things like that. So, when we make changes to the challenges, like we don't just do it haphazardly. It's like a multi-month process to do it properly and make sure we're involving the right people. Like I think I've seen this a lot lately in the futures space. A lot of prop firms have launched futures props and within a week changed the rules, being like, oh, we're sorry, we got it wrong. We listened to the community and we've changed it. And I'm like, and again, traders are always going to look at what's easy or what's good for them and maybe not think a step ahead. But I look at it like, well, how hard did you plan out those rules or those plans or those challenges? Like, how much research did you do if within a few days and a few complaints on Discord, you change the whole risk profile and business model and structure of your business? So again, I think traders might look at it like, oh, this firm's listening to us and changing everything really quickly for us. That's more of a red flag to me than actually something that's good. So again, it's one of those you got to look at it inversely a lot in this industry and really sort of look at maybe the underlying causes and meanings of decisions and products offered by prop firms. So again, that's where we stand on the margin rule. But yeah, we can move on to another question now. Well, I mean, I've said it like a million times in this call. People, they say like change the rules, it would be better for traders. And I'm like, well, if our rules aren't good for traders, why do our funded traders have double the industry profitability rate or average industry profitability rate? You know what I mean? It's kind of like, I get it from the face of it, why you might think it's better because it's easier, but like a lot of things in this world, just because something's easier doesn't actually mean it's better for you. Sometimes taking more time, forcing traders to be a bit more patient. I think forcing sounds a bit harsh, but ultimately that is what it is. I'm not gonna sugarcoat it. I'll be transparent about it. Helps make it better because that's what a prop firm is meant to do. It's as much as we can look at it as a retail trading product. You're buying an evaluation. It's you're a service provider. You're a customer. There is a level of education involved in it, and I think responsibility on the prop firm to actually help make people better traders over the long term. And it's easy to get cynical, about the whole thing because of like the business model. A lot of prop firms out there don't sort of manage any live trading, or I think people look at it kind of like it's an us versus them situation. I can understand why that is, but I think there are ways to make people better long-term profitable traders, but as long as you manage the pass rate as well to ensure that the best possible people are getting to the funded stage and your trading data in the funded stage is as clean and pure as possible and not just full with gamblers and random trades. So you can then use that data for upstream trading activity as well. So again, like I think that I definitely believe, and we're seeing it in the data, you can make a firm that has the long-term profitability interest of traders at heart. And to be building it in the data, it not just be an idea 9 months ago, but actually to be in the data and that's all in motion is really sort of been the biggest reward of launching this. It's kind of my take on everything. Yeah, look, there's so many red flags. I think, look, like I said earlier, and I've said this in a lot of interviews, the things that make this industry great also make it bad. There's so many double-edged swords in this industry, and I think the thing that makes prop firms really cool is the fact that it's an e-commerce user journey. It's very quick to get an account and get trading, as opposed to a classic retail brokerage setup. And it's easy. Anyone who's bought a T-shirt on Shopify store or anything like that knows how to purchase a prop challenge. The downside is a lot of people who run these businesses treat them purely as an e-commerce business, and they don't look at the other side of the business being risk management or business continuity. So whenever you see a firm that treats their business purely as an e-commerce business, like massive discounts, like 50% discounts, buy one, get one free, upon purchase kind of firms, that's a huge red flag. But again, I think the problem is it comes back and look, it's tough because in a lot of industries, people always talk about how to be a good business owner or how to run a good business. No one ever talks about how to be a good customer. And I know it sounds a bit sort of controversial because, you're always meant to, the customer is always right is a very common saying too. But I think as a consumer, being a good customer in the industry is stopping and actually analyzing the products as well. And it comes back to what I was saying earlier, just because a firm makes it easier to pass or makes it easier to reach the payout and get paid, it doesn't actually mean it's a better product in a way. I always compare this to, and it's a very terrible analogy, and I got to think of a new one, but I always say it's like I could start selling Ferraris for $10,000 and I would be the best Ferrari salesman in the world and be most loved by my customers. Because who wouldn't want a car that good for that cheap? But if you asked anyone, is that a sustainable business model? They'd say, no, that's the stupidest thing I've ever heard. But what's funny is that analogy is exactly what happens day in, day out in the prop space, but people don't realize that the challenges being sold are a stupid product that aren't sustainable. So that's the biggest thing to look at in terms of the scam firms is like, is the product too easy to pass? Is it treated too much like an e-commerce business? It's not even other things. Like people will talk about Trustpilot reviews and things like that. I mean, Trustpilot can be gained, so much by so many firms out there. And, I think 3 or 4 firms have lost their Trustpilot in the last month for that very reason. So, and that makes it harder for traders because of the fact that a lot of these public trust platforms can be gamed or bad actors abuse them, makes it even harder for people to see who the good and the bad firms are ultimately. But I would say if you look at the platform, if it's treated too much like an e-commerce business, it's too easy to pass. There's no evidence of backing or anything. Like it doesn't even have to be broker backed. As much as I think that's a great example, like who is backing it, but also like, is there an actual face to the business? Like who is the face of the business? Is it someone who, just has, was a Forex influencer with like a Lambo in Dubai or something? Or is it somebody who has years of experience, not even just running a prop firm, running any business or something like that? It's about what's backing it, what makes it sustainable, and yeah, are they treating it seriously? Like, I mean, they're sort of the big things to watch out for. So really, how can traders protect themselves from scams? I think it's just about being smarter consumers sometimes. And again, not their fault. It's hard sometimes in this space because there's so many smoke and mirrors, false fronts, sort of false images people portray of themselves and that. So it is really hard to be a trader and find a legit prop firm. Because as I said before, and I don't want to be like a fearmonger or anything like that, but just because a firm's big as well doesn't necessarily mean it's safe. And we can remember back to March last year where that was very much the case, where a lot of big prop firms went down. So again, size is not always the biggest determinant as well. I would say it's seriousness, backing, and how sustainable the rules are ultimately. Yeah, and it's kind of the sad thing with that in that, like, I know it sounds weird, but what makes a lot of these, they're not actually scams. Even going back to the question, it's because a scam kind of implies intentionality with it. But that's the sad thing about this space is a lot of these perceived scams or rug pulls. They weren't scams or rug pulls. It's actually in a way sadder because I always say this: like, if something was a scam, there is some, and it's very malicious, but there's sense to it. It was orchestrated. It was planned like that. But what's really sad about this space, a lot of these firms blowing up, it wasn't a scam at all. The people didn't walk away really with any money a lot of the time. It wasn't an actual scam. They had no idea how to run a business. There was nothing intentional about what they did. But sometimes that's even more scary because it's very hard to see the red flags with that. Sometimes, and that's why I said, look, as much as I'm being a bit maybe cynical and generalizing, it's the Lambo guy in Dubai starting a prop firm. The scarier thing is actually when it's someone who is going to blow the firm up unintentionally, because you can't see a lot of those red flags of, well, this is clearly too good to be true. This is clearly a scammer running this. You genuinely believe in it because the person is legitimate and all those things I said before, it does tick the boxes. But again, they just might not have that business sense. So that's where backing and a background in the industry is also really important. Again, not to try and diminish some of the great works, because there are people in the prop space who have come from outside this industry or have built firms very young with no industry experience and still built great prop firms. There's a few of them out there that, I take my hat off to the people who started at such a young age. I think they've really done a great job, but they also wised up, I think, when things were getting really heated too, and made the right calls instead of cruising. So again, makes it really hard for people to know who's good and who's bad out there. But I think, bringing it back to backing, who's running it, and how sustainable the challenges are going to be the main indicators of long-term success of that firm. Well, before starting Blueberry Fund, I think the goal with a lot of these people is to try and obviously make some more money, or they felt like prop firms were maybe taking some of their business and they want some of it back, which is always the funny thing is I feel like a lot of brokers out there don't like prop firms, and people ask me why, and I said, well they say they don't like the product, but I think deep down they're angry they didn't think of the idea of prop firms first. Because I remember when a lot of props are coming to us at the broker I was at a few years ago asking for platforms, infrastructure, liquidity, and I knew about FTMO and I knew about a lot of prop firms, but I'd go around asking everyone, and everyone's like, oh no, who's paying money for a demo account? It's a scam, it's not regulated, I don't understand it, how does it work? Everyone said that, and that was what was funny, is like that actually made me want to dive into the space even more, because I'm like, a lot of the growth of this industry was organic and community based, and when you see a lot of people downstream loving a product and everyone above you hates it, like you're kind of like, oh, this is like the next new big thing in a way. So brokers always hated prop firms for a very long time, but I think now they're taking them more seriously a lot. But again, we didn't approach it like that, like, oh no, we're losing business to these firms. It's actually quite the opposite. I don't see brokers and prop firms as competitors. Ultimately, I see them as and products, not all products. Because look, not trying to diminish the value of prop firms, but it's every trader's goal in the long term to trade their own capital. I mean, who wouldn't want to? You get more flexibility, you make your own rules. However, a lot of traders don't have that capital to make meaningful money. And to get to that level of capital or that much returns or payouts, that's where the prop firms come in. So for us, it was always about extending the brand to capture more of what we call the trader's journey. So ultimately, and that's where the broker payouts are coming into play now, because we know that X% of people, when they withdraw money from a prop firm, are going to go and then deposit it in a broker. And really, if we've already traded the conditions, given the traders the conditions that have led to their success to get payout, it would make sense for them to continue the same strategy on the same conditions with the brokerage side of the business. So look, for us, it's about, and I think it's such an exciting time in the trading space. Like the last 5 years has just been amazing, because all these new kinds of business models, a much younger demographic has come in with new ideas. Like I always used to joke back in the broker space, it was like every year our average client was like a 36-year-old male that likes trading gold. And the next year it's, all right, who's our average client? It's a 37-year-old man who likes trading gold. And I was always sitting there on the sidelines like, crypto's getting huge, NFTs are getting huge. We saw like stock option trading with the GameStop saga and everything in the US, attracting so many young people to trading. And I was always scared, like, I think the CFD space is just like missing out on this, like a lot. And so we've seen such a breath of fresh air come into the space, and trading's no longer limited to just getting, depositing money in an account and trading it. We're seeing prop firms give a lot of different challenges that can give people lower downside risk and higher earning potential. If, again, they're responsible, it actually encourages responsibility and sustainable trading for them to make that money. But again, on our side as well, we're not just stopping with the CFD prop firm. Like, I think we've learned that this model works, and we want to sort of capture as much of the ecosystem as possible. Like, I think a lot of brokers continually move to multi-asset. Like, some brokers might start spot crypto exchange or a stock brokerage unit as well, but all under the brokerage. I think with us, we want to make as many other businesses that are sort of broker adjacent that feed into it, and that's really what we're doing with Blueberry Funded. Other ideas we have for the future, but I think it's such a great time, for this industry to sort of come up with new ideas and implement them. So yeah, it's exciting times. I don't know how much I'm allowed to say. I'd have to ask the legal and the marketing team, but I think that kind of answers the question in itself. So yes, we do have plans of moving into the future space. Again, we've not wanted to do this haphazardly though. Again, we don't like rushing into these kind of things, and the future space has been an interesting one because, and again, I'm one of those people that is, for better and for worse, very contrarian at times. So when a lot of other prop firm owners were saying to me 9 months ago, moving into the future space, it's big, there's so much better profit margins, everyone loves the future space, I was always a bit contrarian, thinking, well, is it only good because there's less, competitors in it? The scammers haven't come in yet. Is that what makes it profitable? And when all the CFD prop firms launch their own futures arms, which we've seen, we're going to see that success diluted. So we've always been very cautious on the sideline. And again, being a different product, like right now, we don't service the United States under the CFD side of the business. For compliance, legal, platform reasons, and that's something we're very, very determined on. But that being said, like, no matter how much we don't market to the US, we don't take the traders, we geo-block the checkout. Our third highest country by web traffic is still the United States, and we see a lot of popularity there. And the only way we'd want to operate there is if we can do so in a compliant legal fashion. Futures, even though not fully regulated, is probably the closest thing to that. So in order to service the demand we have now, because we see a lot of people from the United States asking us, but also move into that area, because we've done the due diligence, we've gotten a lot of legal advice on it, we didn't want to dive into it. We're now at a point where we're comfortable to launch that. But also, much like we did with Blueberry Funded, this is coming in as another entity in the Blueberry Group, so it is broker backed, which gives people more security. But also, we are launching in a very sustainable manner as well. Very much like what happened with the CFD space, we've seen more race to the bottom futures firms, as we predicted. We've seen that over the last 6 months. A few bad actors that have blown up as well and caused a lot of grief. So we've been on the sidelines looking at that, getting legal advice, doing risk modeling on these challenges, and we're very excited to go live, with this in the coming months. Again, I don't know how much I can say, but I just said more than enough. But again, I think if we do launch this, we want to launch with something a bit more unique, because I think, like I was saying, once a lot of CFD prop firms wanted getting on the future space, we see the copy-paste futures firms all launching, in rapid succession, and I think that's just going to dilute value for traders. So if we go live, we want to do it with sustainable challenges and, offer maybe a bit more of something a bit different, I think, to, give us a bit more unique value to all the other firms that are already out there. Yeah, and I think I've kind of inadvertently already answered this, but being broker backed, and again, not just backed by some out of the box broker, but a regulated one that's been around for 10 years, there's very established infrastructure there. Being regulated in a tier 1 jurisdiction gives access to higher grade liquidity and higher quality pricing as well. So being able to sort of bring that downstream and give it to traders means that we're operating on a very different playing field to a lot of other prop firms that just take an out of the box price feed and just distribute it without really knowing what makes pricing good or how to optimize it or to continually add liquidity or format the order book to give more value to traders. So again, we're able to really back ourselves onto a very large, experienced risk operations team that then has access to multiple tier 1 liquidity providers as well. And we sort of co-locate host all of bridge platforms, everything, in the same venue as liquidity providers. So that's hosted out of LD4, Equinix servers in the city of London, in London in general. And, that's really sort of giving people faster execution, deeper liquidity, and a lot more volume concentrated around the top of book to ensure minimal slippage. And again, that's not just, a marketing tagline or a slogan I'm putting out there. We have had our conditions reviewed by Prop Firm Match, the Trusted Prop, who are two very large sites in the industry, and we come out on top for gold, indices, and a lot of Forex pairs as well. But again, the thing is, because there's a broker backing this, it's an ever-evolving setup. Like I always say, liquidity, it's like a trading strategy. It's not set and forget. You're not like, cool, is my liquidity stat, time to go run my business. It's something, it's like customer service. You don't just put an FAQ up and you're like, cool, it's done. No, you have people always talking on live chat, always identifying issues, taking those internally and improving things. And it's like that with liquidity. You're always talking to the providers. You're always analyzing the pricing. You're always finding new providers in that. And I can speak to that because that was my background in brokerage for many years, was sort of building out pricing and infrastructure and things like that to give that value to traders. So it's something I'm very passionate about as well, and I nerd out a bit, probably a bit more than I should. But I just think we sort of have that access that even other broker-backed prop firms that I would argue are in a similar caliber to us in terms of licensing or tech. I still think our pricing on the Blueberry market side is better, and you can compare the brokers' pricing as well there to sort of see it reflected as well. So I think we really come out on top because of those reasons. I believe this was actually recently finished. And look, it's a great point because we do ask a lot of our traders, when it comes to these rules, it's the thing about having stricter rules is we do make traders have to analyze more and think more, which again is to their benefit, I believe, in long-term success. But we do ask a lot of them. So where we can make it easier, we definitely want to do so. And that's why we built the margin. I mean, it's not really a margin call calculator like the person asked, but really a margin level calculator. So you can know in advance, well, if I'm opening 3 lots of pound yen and 10 lots of gold, or that would actually be a very large gold position actually. So maybe 1 lot of gold will say, what's my margin level going to be? Is that safe to enter the trade on? But again, it's good for traders to have the ability to do that in general, even if they're not, trying to avoid hitting that margin level. So they're aware of, what margin requirement impact is going to be to their margin level and trade more responsibly as well. Yeah, it's a tough question to answer because we've already we're hit where we wanted to be in a year. We've already hit now. So it's almost like we're readjusting the forecast. And that's a good problem to have. That's a good problem to have. And I thank the traders for that and the community every day. But look, like I said, we're just planning to expand the ecosystem. For us, it's not just about continually scaling what we already have, even if there's more, sales, clients, and increasing the size of Blueberry Funded as is. We want to be a very different firm in offering to what we are now, and it comes down to offering new asset classes, new kinds of challenges, new trading platforms, and continually adding new things. Sometimes those announcements are small ones, sometimes they're big ones. But the thing with us is I always make sure we're in sort of our planning and our pipeline. There's always room for new things. I mean, you always have to optimize and scale your existing business, no doubt about it. But I think when you're managing this business or any trading business, you always need to force a certain percentage of everyone's time to making new things, because I always remember this in the broker space, it would always be like a famous argument I'd get into with tech people. They'd say, look, when we put all the fires out, then we'll build something new. And then I'll always say to them, when are you going to learn? When you're a trader, when you work in the trading industry, the fires never go out. When what you do is tied to the markets, and the markets are always volatile, no matter how risk averse you are, there is always going to be chaos. And traders should be aware of that too when it comes to their strategies, but it's how we run the business as well, is that, you have to make time to build new things. And that's part of our ethos and sort of how we operate. And so we're always going to be putting time aside to bring new things to traders, sometimes small things, sometimes big things. But, we've launched a lot in the last month or two, and they're really just getting started items like stock challenges, trade locker, and things like that. But in the next month, we're going to have the broker back payouts. We have another asset class that we're launching challenges on. We also mentioned the futures firm a bit earlier as well, which is a bit of a sneak peek into that. But yeah, we're sort of always working on new things and want to be giving new value to traders. And any ideas or any feedback traders have out there on new things that would make the space more interesting, we are all ears. So feel free to join the Discord and send through that feedback. But yeah, a lot of big things on the horizon. We're just getting started. Thanks, Chelsea.